The Construction Market Guide is designed to provide contractors and construction executives with timely data on the economic environment, materials prices, and the labor market so you can make informed decisions that increase profitability. The unemployment remains low, with the national unemployment rate at 3.6% and the unemployment rate in construction at 4.6%, coming down fairly significantly since the winter. We see construction sentiment is strong, improving year over year from the prior year, and continuing to represent fairly significant backlogs across different sectors of the construction industry. The Architectural Billing Index, while it's weakened a bit more recently, it continues to show expansion in construction across the country, with expansion in each area of the nation, having strengthened in the Northeast from what the numbers looked like just a month or so ago. The biggest primary driver we're seeing right now is the high cost of diesel fuel and oil prices, up a whopping 72% over the last year, continuing to put pressure on construction companies and the entire industry. Iron and steel up significantly over the last year as well. Asphalt and paving mixtures continuing to be volatile, and the same thing with lumber. It's come off a bit, but still very high costs relative to historical averages. New housing starts have been steady, and interest rates, after spiking earlier this year, are starting to flatten out a bit and moderate, although again, pretty substantial increases. A lot of construction projects are using the prime rate as a financing rate, and we're seeing that's increased from 3.25% a year ago to 4% today. Mortgage rates increasing, and generally borrowing costs for construction projects increasing pretty significantly. That's the downside. The positive side is if you have cash, particularly cash in excess of $100,000 within your business, there are opportunities to get higher yields on short-term money, with the yield on, for example, the 2-year Treasury increasing to just under 2.5%. Again, a good opportunity if you have cash in your business that you want to keep safe, cash for bonding or other purposes, or just emergency funds within the business. Good time to review the interest rate you might be getting on those savings today, and feel free to reach out to us if we can give you some comparisons on what appropriate yields might be. The stock market continues to be challenging, although it's come back a bit more recently. Small company stocks down almost 20% over the last 12 months. The S&P 500 down about 16.5%. And again, real estate down nearly 16% as well. But the big shock is that traditionally safe bond investments are still down more than 9% so far this year. Again, that's in an investment category that's traditionally safe and traditionally conservative. So that correlation with everything being down together has made it a challenging time for investors. So again, it does present opportunities potentially to start to buy stocks at the lower prices that we're seeing today if you have a long time horizon and you've got time to weather the volatility that we're seeing in the markets today. Could be a good time to begin buying or adding to your stock portfolio. If you'd like to take a look at your investments, have us review it, please reach out to us. We're happy to chat. Thanks.